The European Central Bank has slashed its growth and inflation forecasts for this year and the next two. It signals that the slowdown in the Eurozone economy may be longer and deeper than previously expected. The central bank has kept its benchmark interest rate unchanged at a record low of 0%. While the bank had previously flagged a rate hike for this year, it now says rates will remain steady through to the end of 2019. It also plans to pump fresh liquidity into banks through ultra-cheap loans starting in September. The measure will help lenders provide better credit conditions to customers to stimulate the economy. The bank has revised down its growth forecast for the economy to 1.1% in 2019 compared to a previous projection of 1.7%. It's also lowered its inflation forecast for the year to 1.2%, much lower than the 2% target. But President Mario Draghi says he doesn't anticipate a recession.
The Governing Council expressed confidence. All members expressed confidence in the baseline, which means that we assess the probabilities of a recession as being very low, as well as the probabilities of a de-anchoring of inflation expectations are indeed very low in our assessment.
For more on this story, let's bring in Kevin Ozebek from Brussels. Thank you very much for being with us on the programme, Kevin. So growth and inflation forecasts have been slashed for the Eurozone. What is behind that slowdown?
Well, it's not just one specific thing you can point to. There are several different things happening all at the same time that are really dragging down the Eurozone economy. First off, there are some troubling signs in some of the biggest economies that are in the Eurozone. Italy slipped into recession late last year. It's still projected to have some periods of contracted growth this year. In Germany, you know that's an economy really powered and fueled by the car-making industry there. Well, there are some troubling signs with that industry in Germany. Elsewhere outside of the Eurozone, we're seeing a weakening economy in China that's really detrimental to the Eurozone because this is really an export-driven economy. You also have those trade wars sparked by U.S. President Donald Trump. That's not helping as well. So many different things happening both in and outside of the Eurozone that are really starting to pull this economy down.
So lots of different things to contend with then, but they also had some new ideas to try and stimulate the economy, didn't they? What were those?
Yeah, so what we saw the ECB do today is really reverse course, and this was not expected. Investors were really caught off guard by the announcement for Mario Draghi today. First off, it was just a few months ago that the ECB announced it was going to stop its massive bond buying program that was pumping billions of euros into the Eurozone economy. Well, just a few months later, we saw Draghi today saying that these historic record lows that have been in place, these historic low interest rates that have been in place for years now are going to stay here in the Eurozone at least for all of this year. We were expecting sometime this year for the ECB to begin to tick those rates up. Also, they announced today another stimulus program, more loans in September. They're going to start a program where banks are going to have access to really cheap long-term loans. That's all in an effort to pump more euros into the economy. So the ECB is really trying to go back, take a few steps back here to help keep the economy here afloat.
And how did the euro react to all this news?
Well, it hit three-week lows against the U.S. dollar. At one point during the trading day, it was down more than a half a percentage point against the dollar. So 1 euro now is valued at about 1.12 U.S. dollars. So definitely the currency here being impacted and taking a real hit from all of this.
Okay, Kevin Ozebek in Brussels, thank you very much indeed for joining us.